Thank you for being here. I'm President and CEO of the Chamber. Before we start today's program, I want to be sure to thank our sponsors for helping to make all of our programming available to all of our members at no cost, which is a great thing to our members. Especially, I want to reach out to and thank our presidential sponsors, Advent Health, Country Club Bank, CrossFirst Bank, Demdeco, Evergy, and Menorah Medical Center. Now, I also want to welcome our speaker for today, John Addessi. He is a business advisor with the Johnson County Community College in their Small Business Development Center, assisting Kansas entrepreneurs in Johnson, Miami, and Wyandotte counties as they start to grow their businesses and continue to grow their businesses. I should add that part as well. He has consulted with over 1,600 Kansas businesses and individuals as a KSBDC, Kansas Small Business Development Center, consultant with both Washburn University and Johnson County Community College. John's focus is on job creation, access to capital, and international trade, and he loves marketing as well. Please join me in welcoming John. I am going to make an attempt now to give control to you and get myself off the screen. So thank you very much, John, for being here with us today.
No, Kevin, thank you for having me. This is great. Great to be here and great to talk to you all about this. So let's see. Hopefully you are looking at that lovely slide with the road. Give me a yes.
Yes,
if you see
you are. We're good. I'm trying to hide selfie. It keeps moving around. Okay, I got it. So thank you.
The road keeps moving.
Yes,
like
it does.
In California.
Yeah,
so, well, thank you both for having me. This is the fun stuff. I mean, this morning I was deep in some financial analysis, so this is this is much better. And as Kevin mentioned, and very kind, it's kind of a misconception about the SBDC that we work with startups. But really, 80% of what we do is with existing businesses. Y'all are the engine for the economy. You're the folks that are creating jobs. 2/3 of net new jobs come out of small businesses, and so that's why we need to keep you guys alive. So we've got a program today called The Road to Recovery. Now, I'm a bit of a wise guy, all right, and so I apologize for the next slide. I am not trying to make fun of our friends slightly to the east of us here. But not everyone has the exact same road, okay? so I'm going to say that we're including this solely as an example of some fabulous content that you can share with people. But just a little fun to get us started. Got to have this. I call this the obligatory NASCAR slide. You got to have the stakeholders, because we are funded by the SBA. We're not actually part of them, but they do fund us, where they kind of contract with us to do their consulting. I'm an employee of Johnson County Community College, and half of their mission is really giving back to the community, and this is how they do it. And one of the ways that they do it, one of the many ways that they do it. And then also the state puts in, they don't have to put in any money under the SBA law, but the state actually chose to, even when they were broke, because just of the economic engine that we were talking about. Every dollar they put into our program, they get back 40 because of the sales tax that y'all generate with your businesses. And then you have your own payroll taxes. Those people go out and spend their money at other businesses, and it just keeps on rolling. We just count the sales tax and payroll taxes, and it's still 40-1. So again, the power of small businesses is just bloody amazing, which is why we're here to get them started and keep them growing. So a little bit of impact. We all know that things have impacted businesses. This is a graph of, let's see, end of 19 was blue. So before this whole thing started, most, not all, but most businesses were profitable, and then as we got to now, we're seeing things flip around a little bit. They have adapted very well. The personal protective equipment, they got into that. Teleworking, I've been working from home now for nearly a year. Cat's tired of me, that's for sure, as they are. Revising policies and procedures for employees. We'll talk about some of that stuff. Health screening. Most, a little bit over half, have had to reduce employees. They are, however, still, as small business owners are, very optimistic about the future, but also very much aware that it's going to take some time. This is not going to be an immediate kind of fix. We're at 12% of the population has been given the vaccine so far. So we got a little ways to go. And so about half of small businesses figure it's going to take another 6 months or so for things to really come back around. And I got to tell you, with one or two exceptions, because I do have a couple of things in here that might really save somebody's bacon. Um, there's actually a really boring sounding tax credit, which for one of my clients was $1.4 million. And for another one, it's just a little bit over $500,000. And they're very happy with me right now. And I want to make sure that I share that information with you. That is certainly a silver bullet if it applies. Most of this is common sense, money, marketing, and management, but we'll go over that stuff. And there it is, always one slide ahead. And so we're going to go over those three and kind of double down. I realize management and people is part and parcel of the same thing, but we're going to double down on that. But before we do, I do want to make sure, I know you've heard a lot about what's going on. You probably have had webinars and training on some of the programs. So I just want to make sure we're all on the same page on this. I just want to spend just a couple of minutes because it's going to break my heart to find out after March 31st, when many of these programs sunset, that a business that could have taken advantage of some of these things didn't choose to and lost out on some wonderful opportunities. So I just want to spend a couple of minutes making sure we're on the same page about the PPP and the EIDL and that tax credit. There's what they call a second draw for the PPP program. So that's the Paycheck Protection Program, where basically you get a loan and you're borrowing 2.5 months or more if you're a hospitality business of average payroll and income, and then they forgive the loan as long as you spend it on payroll and rent, utilities, things like that. We'll talk a little bit more about that. They haven't modified the EIDL, the Economic Injury Disaster Loan, the very first thing that came out as part of the CARES Act, and extended that through the end of the year. If you didn't get a Paycheck Protection Program loan, you can do the first draw again through the end of March. That's coming up fast, though. There's shuttered venue grants. We won't go into that, but that's a lifesaver for those businesses. And then the one that I really want to spend a little bit of time on, they've modified the Employee Retention Tax Credit, and you can do that even if you're participating in the Paycheck Protection Program. So that's one of the things I want to spend some time on. So second draw for the PPP. Again, 2.5 months of payroll. If you're in hospitality, it's 3.5 months. You go to your bank, you get a loan, you use it on payroll to keep people employed. To a lesser extent, you can use up to 40% on mortgage payments for the business, rent for the business, utilities, some supplies, PPE, and then forgive the loan. Okay. If it isn't forgiven, and it's designed to be forgiven, but if it isn't for some reason, it turns into a 5-year note, 1% interest. And really, as long as you participated in the first round and you're going to use the money up, or you have, and frankly, come on, you have. It was designed to pay for 2.5 months of payroll. You used it up back in June or July or August, probably. Fewer than 300 employees. That's the vast majority of small businesses in America. And you had a quarter, at least one quarter in 2020 that was down versus 2019. And they are so cool about this. They don't care if you had a banner year in 2020, as long as you have one quarter that was down. So you don't have to show a net negative for the year. Just as long as one quarter was down versus 2019, you're eligible for this thing. You apply at your bank, and why it says "and soon" is because this puppy's going to sunset on the end of March, and really the banks are not going to take applications right to the March 31st date. I mean, many of them are going to have to pull the plug probably 10 days before to finish with the paperwork and everything. So if you qualify for this, please go get this money. They've fixed some things with this stuff. It's much easier to get forgiveness now. It's a one-page form, admittedly with 5 pages of instructions, but still. One-page form for amounts under 150 grand. So if your annual payroll is under about 720,000, that's 150 grand for those 2.5 months. Most people are going to be able to use that one-page form for forgiveness. That said, starting tomorrow, and this is the latest scoop that just came out yesterday, I think, they are limiting PPP applications to businesses under 20 employees. They're trying to give the small businesses an extra chance to get to their banks and get this thing going. So that's going to go for 2 weeks starting tomorrow. Will just be only employers under 20 employees will be applying. It does work. Okay, this was the first round of this stuff. Johnson County, almost 12,000 PPP loans, saved over 128,000 jobs. Like I said, you guys are the economic engine to the United States. Almost $5 billion injected into the state overall. That was at the very bottom of the slide was a note from one of my clients has said, look, uh, we kept our people because of these loans, and that's exactly what it was designed for. And again, to fix some stuff in these things so that it's no longer. It was always designed to be tax free, and then the IRS came out and said, "Well, wait a minute. If we're paying for stuff, why the heck should we let the business owner deduct it from their taxes?" And that ended up making it essentially taxable. They fixed that in the December 27 bill, so that's pretty cool. Um, Things have gotten better, honestly, with this stuff. The EIDL, the economic injury disaster loan, kind of the very first thing that came out, and you heard about it with a $10,000 grants or advances or so, has been extended through the end of this year. Now, this one is a loan, okay, and it's a long loan. It's 30 years, and it's cheap money at 3.75%. But basically, they look at your annual gross profit, and they estimate the loan at half of that. It's designed to pay 6 months of the bills, okay. This is a situation where when it first came out, they were doing that $10,000 grant. And then they said, well, whoa, wait a minute. We're kind of running out of money. Now we'll do $1,000 per employee. The good news is that certainly for businesses in low income areas, they're going back around. They're going to try to give as many people in those situations the difference to get them back to the 10 grand. So if they gave them two for two employees, now they're going to come back and deposit $8,000 more. If they have enough money, they're going to go around to everyone that applied, basically, and make that up. So that's pretty cool. That's coming out. That's still there. It's cheap money. This is the one that perhaps the silver bullet, the ERTC. And this one is kind of like an unsung hero of this entire thing, okay? Fewer than 500 employees. And now we're talking 98% of businesses in the United States can apply for this thing and be eligible for this thing. If you are still being hurt this year, and that is basically a quarter in 2021 that's 20% down versus the same quarter in 2019. Kind of make sure I get this stuff right. You're eligible for this. And there's confusion, I think, because it's basically a credit to your withholding account, okay? And I think what employers are thinking is that, okay, that's helpful if you give me 70% of my FICA contribution, but that's not going to move the needle. No. It's 70% refundable tax credit on payroll, okay? So it maxes out at $7,000 per employee per quarter. So if you're still being affected by the pandemic, we're looking at up to $14,000 per employee in fully refundable tax credits. So if it goes beyond what you need to have for your FICA contribution, they'll send you a bloody check. And there's actually a form you can use, Form 7200, to get this money in advance. So we're coming up to the point you can start to apply for this at the beginning of Q2. So we're coming up pretty close to that, really, when you get right down to it. Sad to say, it's March on Monday, right? So work with your accountant and your payroll provider. Again, I got this in front of a couple of my clients. One of them employs over 100 people. It's a $1.4 million tax credit. They are still getting hammered a little bit. They're hitting that 20% figure. One of the other ones is in aviation. Of course, they're still getting hit. And it's a $540,000 tax credit for them. So this money is out there. And last year, it wasn't as good. And if you did the PPP, you couldn't do this. This year, it's a bigger amount that they're crediting, and you can do it even if you do the PPP. So that's a couple of confusions out there we want to make sure we clear up. PUA, the Pandemic Unemployment Assistance, is still going. This is basically extended payments for people. It's going to end. I mean, it's going to sunset now in, less than 3 weeks. You apply, of course, through the Department of Labor, and may God have mercy on your soul if you have to do that, because the only people that seem to be able to get through that thing are scammers. I was one of the many people that someone tried to collect my unemployment, even though I'm still working 2 jobs. But anyway, that's still out there for folks. And then another unsung hero, and this got a little less good this week, but it's still pretty cool. If somebody closes on an SBA loan between February 1st, just a few weeks ago, and the end of September, the SBA is making a couple of months of payments. Now, until this week, it was 6 months. That's awesome. Full principal, interest, and fees. We started to run out of money with this thing, and so they've kind of backed it down now to 3 months, but it is completely automatic. I mean, we're looking at using this for clients anywhere from, oh my God, I got a client that needs 10 grand for a startup to do a micro loan, all the way on the other end of the spectrum to a $2.4 million acquisition. Now it does cap out at $9,000 a month, so that works out to about $1.5 million loan, basically, where you're going to maximize that. But again, completely automatic. I mean, the bank basically sends a bill to the SBA. The SBA makes 3 months of payments. Is that reason to go into debt? No. I mean, you'd be nuts to go into debt because of that. But if you were going to expand, if you're going to get a working capital loan from somebody, if you were going to make use of the fact that there might be some bargains out there in real estate and buy a place to use for your business, this could really help with some cash flow for a bit. And then also brand new, Johnson County just got, I think, $2 million or so more for training. And they've made it so that almost any business can apply. If you're in Johnson County and you have fewer than 100 businesses, you can get your people trained for free. Okay. It's through Kansas Works program. And it mellows out a little bit. It gets a little bit less that they're kicking in as you have more employees. But really, as long as you're under 100 employees, and again, the vast majority of businesses are, there's free training out there. All right. As we saw, though, I mean, hurry on some of this stuff. $2 million sounds like a lot until you realize that there are 25,000 businesses or 30,000 businesses within Johnson County. So don't wait on this stuff. Some of this stuff is sunsetting. But this is a fabulous opportunity, and this is brand new. I mean, this just came out. Couple of tips, and I list, it's like location for real estate, location, location, location. That's why I have that 3 times. Do not pay for the same thing with the same CARES Act money, all right? So again, if you had a PPP loan last year, you used it for payroll last year. You can get one now and use it for payroll now. It's going to cover 2.5 months of payroll. You can get the employee retention tax credit and pay for payroll as well. Just make sure they're different periods. Use the PPP to pay for January, February, and a little bit of March. Use the employee retention tax credit to pay for the next several months or so. So again, just make sure you're not using the same money to pay for the same thing. Okay. And keep receipts. I mean, 3 to 4 years, 6 to 7 years for life. You know how the government is. Keep the receipts for this stuff. It is now, I mentioned this before, tax-free. All right. And they fixed it so that you can still deduct the stuff, even though the government in many cases is paying for it. And again, for most of these things, we want you working with your banker or your accountant. And yeah, you're going to have to work soon because literally it sunsets on the 31st of March for the PPP, for example. But really, the banks are going to need these applications in before that to act on them. All right, so I promised that we're going to do money, marketing, and management. Thank you for bearing with me just to make sure we're all on the same page with the CARES Act stuff because it's kind of important. So we're going to discuss my colleague, Jack Harwell, and his most important number in business. We're going to discuss accounts receivable, a little bit of cash flow management, and managing debt as part of the money discussion today. So Jack's most important number in business is gross profit margin, okay? And that's, again, what pays the bills. It's your revenue minus your direct costs, and then it pays for everything below that line. It's all pays for your rent, it pays for your advertising, it pays for you, It's a little bit different math from markup. Margin and markup they talk about the same thing, but it's different. 50% margin is 100% markup. We don't have to get into that, but it varies by industry. I mean, with a restaurant, for example, every dollar that they get in revenue, 60 cents goes out in direct costs for labor and for the food ingredients, which leaves them 40 cents to pay for everything else if they're managing properly. When that food and labor gets up to 70 cents, leaving only 30 left over, they're in trouble. That 30 cents rarely pays the rest of the bills, okay? So it has to be watched. That's why this is the most important number. Grocery stores, oh my gosh, 78 cents of every dollar goes to their wholesale cost for the food, which is why it's such an incredibly tough industry. I mean, Kansas has lost like 40 grocery stores in rural Kansas in the last decade, which is incredibly painful. But you can understand when you're only making 22 cents of every dollar that has to pay for everything else, the lights and the cooler and the oh my God, the utility bills and everything. It is huge. Just had this conversation today with a client that wants to figure this out looking forward. And that's wonderful because let me tell you, here's an example. And we put this case study on our website. I'm working with a professional service provider. We have confidentiality, so I can't say more than that. but she charges her customers $55 an hour, which by the way is nothing. I mean, nobody charges 55 an hour out there. If you have a plumber come, they're going to hit you for, gosh, 2 to 3 times that for sure. Anyway, that's her price. Okay. And she pays her people $25 an hour. So on paper, it looks like we have a gross profit margin. She's charging her customers 55. She's paying her people 25. But when we look into her industry, she can't charge for every hour. Okay. And in her industry, basically, the billable hours account for about 2/3 because the other third of the time, people are driving, they're doing paperwork, they're sick, they're networking, they're on vacation, they're goofing off, whatever. It can't be billable time, right? So she's not really getting 55 an hour. When you do the math, she's getting 37. All right. Now, there's still room. But when you pay someone 25 an hour, they don't cost you 25 because you're ponying money up into FICA, Social Security, right? You're ponying money up into Medicare, state unemployment, federal unemployment. So if you're paying them 25, they really cost you 30. So now we have a situation where she's getting 37 and her direct costs are 30. She's making $7 for every hour, and that is not enough to pay the bills. And this is why last year, this poor person who has degrees and certifications and is working her butt off made a couple of grand. That's why this is absolutely the most important number in business is the gross profit margin, and one of the ones we watch like a hawk, really. And we're going to work with her to change pricing. If she can't get her current customers to budge, we're going to find new customers. She's gotta do that. In terms of cash flow management, there are 3 financial statements. Business owners hone right in on the P&L, right? The profit and loss or the income statement. That's what they're looking at. They want to see, what did I make? Banks go, and I think we got a banker on here at least one. Banks go immediately to the balance sheet. They're looking at the health of your business. But businesses live and die by their cash flow. And that's the killer. And that's the one that doesn't get a lot of love out there when you get right down to it. And it is, honest to gosh, the reason that most businesses fail. 80%, I wish they had rephrased this. On the bottom of the slide, it says 82% of small businesses fail due to cash flow. They don't mean that 82% of businesses fail, okay? They mean that the overwhelming majority of the businesses that fail, it's because of cash flow. They might have been profitable, but the money wasn't there when they needed it. It might have been in inventory. It might have been in accounts receivable. It was not available to them when they needed the cash. Cash flow management has to do a lot with accounts receivable, of course, but also with seasonality. You got a landscaper, they're going to face some real issues with cash flow. If money is tied up in inventory, it's going to really hurt. Or capital equipment, you got a bulldozer that's sitting there that's not in use, not billable. It's just the same as an employee sitting on his butt. You'd fire that employee. You'd find something for them to do, right? But capital equipment that's sitting there is going to chew up cash. And then also just explosive growth. I mean, if you have a situation where, oh my gosh, the business is fantastic and you have an opportunity to open 500 more stores, you're going to have a cash flow crunch. Or just on the small end, you're doing a service business and you get a janitorial business, right? And you get a $2 million contract to do the janitorial services at Fort Leavenworth. Awesome. And we are popping champagne corks that night. But now you need a working capital loan or a line of credit for maybe $1.4 million because you've got to hire people. You've got to train them. You got to get them uniforms. You have to maybe buy some vans. You got to do the job and then you've got to bill for the job. And then you got to wait for the government to pay you for the job. And so this might be a 4 or 6 month period where you're kind of eating some expenses and waiting to get paid. Yes, it's a wonderful contract, but it presents some cash flow challenges. In terms of managing accounts receivable, if cash is king, then accounts receivable or whatever, peasants, peons, problems, any P word you want to use. A smart business will run credit before they even deal with a business, before they even send an invoice. You might incentivize them with some terms, 210 net 30, where you're giving them a 2% discount if they pay within 10 days. A big company will take advantage of this every time because it's great money. Invoice electronically. I mean, people act on that faster than they do if it arrives in the mail. You might hire someone to do your collections, or you might train somebody to handle that. Just timing of the invoices. I mean, people and businesses run out of money sometime during the month. If you can get your invoice to them early in the month, sometimes that can make enough of a difference. In some industries, you might have to pay or use factoring, where you're basically selling your accounts receivable at a discount. Somebody else buys them and then they go after the collections. But man, that's a tough one, because you don't know how they're treating the customer, and you might lose a customer relationship because of that. You might find that you might be able to find outside credit, third party finance, to finance your customers. If you want to be replacing roofs because of ice dam damage right now, many customers probably don't have the 15 grand, 20 grand to replace a roof, and you don't want to be having that debt on the books. You don't have that kind of cash flow to do that. So you outsource that to somebody that might be able to provide that financing for your clients, or you go get a line of credit. Which is there's a reason this lasts, is because you're taking out a loan and paying the interest to essentially lend it to your clients for nothing. And granted, right now debt is relatively cheap. I mean, look at this. This was probably a week or so ago, but I mean, we're talking 3.25% for the Wall Street Journal Prime. Banks are going to add a couple of points to that maybe. But if you have an SBA loan, the bank can work with you and do it just interest only for a while to kind of help with your cash flow. We mentioned the SBA debt relief, so it'll make a couple of months of payments. We really kind of want to work with the terms to make sure that the loan terms match the asset life. We see things out of whack many times there, and then you're trying to pay for something too fast or too long. And again, SGR is sustainable growth rate. And we have this conversation frequently lately, because some of my clients are Dave Ramsey's fans. They don't want to go into debt. They're like, well, John, I don't want to borrow. Well, the sustainable growth rate formula basically says, look, organically, given what you've told me, without any other money coming into your business, you can grow at 3% a year, for example. If you want to double year over year, you're going to need some additional capital. And that's when you're going to go to a bank lender. And again, banks are the cheapest money out there. Okay. Please, 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 please do not go to somebody like Cabbage. Okay. I can't cross that out strongly enough. Cabbage is fast. Okay. They advertise a lot. If you are sitting on a Thursday and you can't make Friday payroll, that's when you turn to somebody like that. It is a 99% interest rate. Okay. Back when Kevin was going to introduce me, he asked me how to pronounce my name. There's a lot of vowels in my name. Okay, I've got cousins that can make you a loan cheaper than 99% interest rate if you want. Also, low doc, very easy. Right? Do not dig yourself a hole into one of these things. It is you're not going to come back out from the other side. Use your banks. Marketing. So we did the CARES Act stuff. We did the money. We promised marketing. It is a very long game. Again, this was just something that HubSpot put out the other day, and I thought it was kind of interesting. This is a marketing professional, and she has to tell her customers all the time, no silver bullets. Yeah, you got to test. Yes, you need to brand everything that you do. It's a very long game. Marketing is a very, very long game. You got to stay in it. Most prospective customers need to hear from you 6, 7, 8, 9 times before they make a purchase. Not every business. I mean, what the heck? If it's a hot August day in Kansas and your neighbor kids are selling lemonade outside, you drive past, you're hot, you're thirsty, you give them a couple of bucks. But for most businesses, it is a number of touches that you have to make with the customer. So I'm going to send you a lot of links. Okay. I'm going to send to the chamber a follow-up with all these links that we're addressing. One of them is a 2021 marketing trends from Hootsuite. Hootsuite and HubSpot are probably a couple of my favorite marketing companies out there. They really know their stuff. I just want to address a couple of the trends within. One of them is the fact that people are not able to physically visit our stores and our offices right now. We have to figure out some way to continue to give them experiences. We've lost that. Luckily, every one of you right now has a cell phone. You got a video camera, for crying out loud, in your pocket. You're able to do something, but you're going to have to think creatively about that. Back when, remember travel? Back when we could travel, I was in Italy, and I love coffee. And Bioletta is the company that makes those little mocha pots for the stove, little Italian espresso pots. Went into a Bioletta store. I'm in heaven, right? And the thing that struck me was there was no smell of coffee. in that store. I couldn't believe they were trying to sell, in some cases, like a $5,000 espresso machine. And granted, they had some $10 stuff. I mean, they're trying to move very expensive coffee equipment and coffee products and didn't have the aroma of coffee in that store. And I thought that was a huge miss on their part. But again, you've got to figure out some way to bring that to people. You can't bring aroma over the airwaves, but you've got to figure out some way to share things with people. And you also need, part and parcel of the experience, you've got to let people know that they're safe. You've got to, I mean, about 2/3 of shoppers are not going to shop at a retailer that doesn't take their safety seriously. So you need to create an experience and create a safe place for the customer. Let's see how we're doing on time. Okay, we're just there. Very much like at a cocktail party where you wouldn't sidle up to somebody and start talking, right? You're going to come up to someone, you're going to listen to the conversation a little bit, and then you're going to participate in a way that's funny or helpful or interesting. We need to do the same thing on social media. We need to listen a little bit and kind of take the temperature of the room, okay? And again, we're going through this really fast. I'm going to send you the entire report. I think it's 40 or 50 pages or so, but you can dive into this. But I want you to kind of listen a little bit and see what's going on. We've seen some businesses not do this, kind of dove in a little too fast with the wrong tone, and it kind of bit them. Do not ignore the baby boomers, okay? Since I'm one of them, please do not ignore the baby boomers. I was born in the last year of that thing. A lot of people are concentrating on the millennials, and that's great. They're moving trends. But if we start talking about just money out there, got to say, boomers probably have more than the millennials in many cases. So just it's still a thing. You know what I mean? People seem to want to ignore the baby boomers, and you really don't want to do that. And then this is a little tough, because what Hootsuite was trying to get at is we need to make these connections that we're making on social media as important and as measured as we do with other forms of communication. And so their suggestion was to actually add these likes and these comments and these engagements that you see on social media into your CRM. Okay. My point is, start using a CRM at the very minimum, a customer relationship management program. There's many times when you've onboarded a new client and you can actually set these things up to provide them with automatic emails as time goes on. So a welcome email, and a week later they get a second one. You write them once and use them for years, okay? Every time a new client signs up, they can go through this process, and you start chipping away at those 6, 7, 8, 9 contacts that you're going to have with a customer. So that's where I am with this thing. If you're not using a CRM, you're missing out on that. And then one of the other trends that Hootsuite kind of picked out on here is that, and then this is probably back to the millennials, certainly, they want to know that you're here for a reason, and so you need to have a mission that's more than just making some bucks. You need to have a mission that you're in some way, shape, or form, you're going to make the world a better place, a safer place. They want to be a part of that. They don't want to be a part of a business that's just there to empty their pockets. They want to be a part of a business that's there for some good. So, be thinking about that and how you might communicate with that. And then finally, money, marketing, and management. We'll get into the people thing. And what we're seeing, and I know you've experienced this if you have employees, is you are now sort of in charge of their mental health and their well-being. You're not just managing their work life anymore. You might be at the very minimum listening to them talk about the challenges that they're facing. A huge swath of America, and I believe it's on the order of 43% or so, is purely in survival mode right now. And what they mean by that is that they can't be thinking about beyond tomorrow. They can think about what they might need to buy at the store for tomorrow's food, but they can't be thinking beyond that. This is where America is right now. 43% mentally are in survival mode, not able to think too far ahead. The college is a fabulous employer, and they have employee assistance programs, which is tremendous. I've availed myself of, as a matter of fact. But at the very minimum, My boss, for example, a couple of weeks ago, when we had some lovely, lovely weather before it got cold, said, "Hey, you've all been working extra hours. I want you to take an hour at the end of the day just to do something for yourself. I want you away from your computer. I don't want to see you on there." She just gave us back that hour. All of us availed ourselves of it and went out and took walks, took hikes. Stephanie took the dog to the park, and it can be as simple as that. Okay. I'm going to send this link, how you can help your staff. Be open about it, talk about it, be communicating about it, and encourage employees if they have to take some time off for themselves. It doesn't have to be as complicated or expensive as an EAP. All right. And again, we're just going to hit some of these things really fast, but I'm going to send you a lot of links at the end of this stuff. Just a trend that you need to be aware of. The gender gap is going to be more severe from this pandemic slowdown for women than what we saw in the last recession. The last recession hit men. This recession's hitting women. When you couple that with what we saw as the absolute critical role of daycare in communities and in allowing people to work because they had a safe place for the kids, and the expense of that, oh my gosh, thank God I have a cat. You really start to see a double whammy where a lot of women are facing lower wages and incredible costs. So just be aware of that. It might factor into your recruiting or something. I've actually got clients that are creating their own daycares at their place of employment just because they know that it's a critical need. You're going to see more technology for managing remote workers. You're also going to see more laws about that for sure. And I think I have on here a little SHRM resource that's coming up on the next slide with some tips on that, because we're moving not just to a situation where people are working anywhere, but where they're working anytime. The millennials, for example, look at that. 77% of millennials, they don't want to be tied to an 8 to 5 or a 9 to 5 thing. If they get their job done at 2 a.m., they're like, well, what's the problem, boss? I got it done, and you need to be aware of that and be flexible enough and still be able to manage them and measure them and motivate them during those times, because there's certainly a shift, a sea shift. So this was an article from SHRM. I had an ex-wife that was a SHRM member. I used to really look forward to the performance appraisals that we used to have every year and the performance improvement plans that she would put together for me. But anyway, SHRM is a society of human resource managers, and some tips for successfully managing remote workers. Here's a couple of them. I think there's 7 of them out there right now. But again, the entire article is out there that you can dive into, and I'll be sending the links to that. But again, shortening the meetings, emphasizing communication. This isn't stuff that's going to cost you anything. It's just a little different paradigm to what's happening out there. Remember to listen. It's kind of huge. And then also a C shift is realizing that we are definitely into a freelance or gig economy out there now. My clients who hadn't yet discovered Fiverr or Upwork are like kids in a candy store with this stuff. It's fantastic. I remember working with a client that had a incredibly creative client, and she had a new product that she wanted to patent, but she couldn't draw. She was like, John, I can't draw anything. If I have to do a patent diagram, I'm dead. We got on the Fiverr, found people that did those things. It was incredibly inexpensive. I think it was like $150. There are so many tasks that you do as business owners that you don't enjoy, that isn't worth your time given what you could bill out for your own time, or what you could do working in your business and on your business to actually build it with that time and outsource these tasks to somebody else that likes them, that can do them quickly, do them well, do them efficiently. Once you start to look into these things, you'll be blown away. I mean, I was able to find, oh my gosh, one of my clients had a Shopify site and was having trouble with the Avalara sales tax software, and we found someone that was knowledgeable in both of those programs. So was familiar with the e-commerce site itself and with the sales tax software that was available. And then one of the very last slides, and we got some time for some Q&A because I talk really fast. These are books and podcasts. I asked my boss, Jessica, my director, for some recommendations. because she is a lifelong learner, and she's very good at this. If she manages me, she's got to be a tremendous manager, because I am no picnic, I've been told. But there's several podcasts that she likes, and some of the books, Eat That Frog on time management. Oh, I see a couple of questions coming in. And 7 Habits of Effective People is a Stephen Covey thing. Our dean and our interim VP right now is a big believer in that, and has done tremendous things in her career following the lessons of Stephen Covey. One of these I did a little bit ago, somebody loved The Radical Candor by Kim Scott. So just a couple of books out there that you can dive into. Lifelong learning is a tremendous success factor. Small business is not easy. Okay. You know that. You're working 70 hours a week or so. It's a financial struggle. It's an emotional struggle. It's a time management struggle. It's not an easy gig for most people. And so being open to learning about what's out there and what's available, and new paradigms, new ways of thinking, new ways of helping yourself and your business are absolute key. So just looking ahead, remember, if you're going to go and get a loan to expand, or buy a piece of property, or even a little micro loan or so just for working capital, you're going to get 3 months of payments. And again, that is absolutely fees, principal, and interest, automatic. There's nothing for you to file whatsoever. That's on the granddaddy of the 7A program, 504 is real estate, microloans. Micro. Those puppies go up to 50 grand. So, I mean, don't be thinking a microloan's $500. A microloan can be $50,000. They've bumped the guarantee to 90 cents on the dollar. So effectively, Uncle Sam is your cosigner on these loans. And also, you used to pay a couple of percent right up front. If you got an SBA-backed loan, you ponied up 2 or 2 3/4 or so percent right up front, paid that. They rolled it into the loan amount, great, but you were basically paying a couple of percent to pay for the loans that went belly up out there in the marketplace. And they've waived that right now. So that could save you thousands. And like I said, I cannot state this enough. You can right now, do the PPP, the Paycheck Protection Program, and the Employee Retention Tax Credit at the same time. And again, you still have the deductions for these things. So, that is me. Let's see, quarter of, I think I nailed it. I'm one of 3 advisors. And so if you're tired of my voice, and you very well may be, we've got Jack Harwell and Stephanie Willis. We are basically, we're 3 MBAs. We're here to work for you. We are here to help your business, yes, start up, but again, 80% of the time we're working with existing businesses to get them to grow. That's our new website, JCCC, That's a mouthful. We'd love you to visit that. We've got the latest COVID stuff going up there all the time, and events. And Kevin, help me out. As I was talking too fast, I saw a few things flash by.
Well, you must have answered everyone's question, John, because we didn't get a lot of questions. But
it was just complaints that I saw.
It was us telling people to please ask questions. So, I know that I was kind of looking at the list of people we have up here on the webinar, and we have several bankers, financial planners. We've got, let's see, we've got some attorneys, we've got a small business owner. And a couple of those actually, one that's starting one that's been established for quite some time. And I think that one of the things that you and I talked about early on, and I've talked about with a lot of the administration at the community colleges, people don't realize you're out there, and you're there for helping even an established business.
Mostly established businesses.
Yeah, and so this is not just for startups, and it's a great community resource that I hope that people will take advantage of. And again, we're going to be sending out information to all of you for that. And I just, again, I also want to encourage folks to take advantage of all that money that the government's making available to help you with your business, because, this has been a difficult time for all of us in any business, that whether it be a big business or a small business, it's been tough, and we've adapted, and it shows our American resiliency that we figured out ways to get things done, but we still would like to kind of start easing back towards normal.
Amen.
One of the things that we're going to start doing is we're going to start offering, but things we learned, and I'd be curious some things you've learned and heard from others. One of the things the chamber learned is that even though we're going to start moving back to in-person events here shortly, and limited with masks on, which was what we were doing back pre-November.
Yep.
But we're hearing from folks, they kind of like these online deals as a part of their chamber experience and a part of their, the online networking events. What other kinds of things have you heard as far as adaptations from your clients that that have been good?
Yeah, well, you're absolutely right. I mean, we've been doing this for a year, and many things can be done this way. I mean, I was driving out to Miami County, Wyandotte County, and I still will, of course, but holy cow, when you can just send somebody a Zoom link and get them on, they don't have to drive. I've driven in other cities, Kevin. Other cities, man, they link their lights. I don't know what the problem is with Johnson County, where I can be at a red light, see it turn green, and see the next one turn red right in front of me. That drives me up a wall.
I can tell you, it's the philosophy of the people controlling the traffic lights. I've had argument after argument about, they like for people not to have to wait very long at each light versus through traffic. And I have an urban planning degree too, John, and I have a diametrically opposed opinion to what most of the people running the traffic lights here think. So,
so you and I are the same. So
yeah,
I mean, if you got to go, my gosh, 8 miles in Johnson County, it's probably a 22-minute drive, which is, and that's time that's out of your pocket.
Right.
And
And that's what we've heard a lot from folks, is why they like these online deals. We can start a morning, say, with a meeting, and then they can jump on, and then they can get on with their day from their desk at home. Now, once they're back in the office, get some good headphones, invest in some good headphones, because it may be harder in your offices to have as many of these, but I think they will continue for sure.
And I think certainly some of the lessons that were learned by the restaurant industry. I mean, look, man, you've got there's only 3 meals. Taco Bell tried to make a 4th meal, but I mean, they didn't have a lot of success for that. For most people, it's breakfast, lunch, and dinner. You got 3 meals. You have a certain number of tables and a certain number of seats, and there's a mathematical number called table turns, where a couple sits down, they eat, somebody else they leave, somebody else sits at that table. You might have 1.5 table turns per meal or something, but there's a maximum capacity for your restaurant. Now with the curbside service and the delivery stuff, no, we've moved the needle on that. And so now the maximum capacity is based on your kitchen, really. And so I think in some ways they're gonna take some efficiencies from this and some new opportunities.
But and I think that curbside's worked well, although I'm here from a lot of our restaurant businesses, they used to rely on catering, that this has been tough for them because people aren't in the office, and it's been difficult to get those 20-person lunch orders that used to be a mainstay of their business, or the pastry order for a breakfast meeting and stuff. That's been a real difficult time for a lot of those restaurants that relied on that business. But again, they're all adapting, as we all are.
And I wish they had done more. I mean, this rendition of the PPP, instead of 2.5 months, they get 3.5 months of payroll, which is great, and I hope it's enough. I really do hope it's enough.
We may be around for another round of that. Hard to say.
Yeah.
Well, I have not seen any more questions flow in. I'm going to give everybody one last chance to do a Q&A, and many of you have my text number too. So if somehow our Q&A is not working, then please shoot me a text and say something's not working. So.
And again, with your permission, I'm going to send you. I'm going to send you an email with a whole bunch of links. Every slide that you saw that had a link.
And I'm sure everyone will.
The SHRM article, everything.
Yeah. The managing the remote workforce is I think a real key feature for a lot of folks too, especially if you don't do work that's easily measured. And I think that's probably one of the more challenging parts of a remote workforce, because you're not making widgets, when you're working remotely. And if you're a customer call center, we can measure how many calls you take and how many people you help. But for many things, it's difficult to measure that. And I think the camaraderie that goes with being around each other is something that I hear from a lot of businesses. They miss that, the team spirit,
Absolutely.
Yeah.
I saw somebody ask about the employee retention tax credit for franchise.
Oh, yeah.
I believe for the individual franchisees, I think that's fine. I mean, like I said, it gets into a situation where for large companies, the franchisor might have more employees, you know, if it's a really big company, but the individual companies, the franchisee, am I getting that right? The store owner, the restaurant owner, whatever.
The guy who owns the franchise.
Yeah, I mean, they're their own business, and so yes, absolutely on that. So,
yeah, that's a good point. That's a good question, Dave.
and what was the second half of that about disqualifying them? If so, what would disqualify them? Yeah, Dave, I might have to do a little bit of research on that. I know they've loosened up some stuff for that because there were big issues during the PPP stuff where you had multi locations. It's really just.
And I think the multi-location had to do with who owns the physical business. Wasn't that the main issue?
I think so.
If it's a corporate store or a big corporation that owns 100 franchises,
right?
It's different.
Yeah, exactly. And then they were over the limits. But you know, I've had stuff bite even my smaller clients. I had one guy with 2 restaurants and really shouldn't have done this, but he had them under the same legal structure. I mean, it's perfectly fine. It's perfectly legal, you know, but it's not best practice, because by God, if something happens in one, the other one's in that same jackpot, which is too much of a chance to take. And unfortunately, fortunately or unfortunately, one restaurant's getting nailed, and yes, he is he'd be eligible, but the other restaurant's kicking butt. And because they're all under one legal structure, he's not hitting the 25 or 20%, depending on the program, reduction in sales.
Great.
So.
Well, everybody loves it when they get 5 minutes back in their life. So, I want to thank you, John, for helping us today. And I'm glad you and I have gotten better acquainted, because we want to continue to utilize the resources at the SBDC for our members. And I think it's really an important thing. And with John's group, this will need to be our Kansas-based businesses. However, there is a counterpart over on the Missouri side too, that we can certainly help with that as well. So
every state, and even like Guam.
Even Guam. Yeah, gotta love that part. And then we're also going to be posting a YouTube recording of this conversation up here. It kind of depends on how the YouTube gods are as far as us getting these posted up here quickly. So we'll get that up here within the next 24 hours, so that if there's other folks that you'd like to refer to the video, feel free to share that with them. So, John, any closing thoughts?
I just saw Guam got a shout out from Dave Kepper, so that's interesting. I think he said he was born there.
Yeah.
But no, please, like I said, work quickly with your bank. Don't put this stuff off. Don't fall victim to the confusion out there, because things have gotten better. Like I said, look, I understand only a third of the PPP loans from last year have yet been forgiven. Okay, I understand, but they've deferred payments on these things. And really, for the vast majority of people that are under 150 grand for these PPP loans, it's a 1-page form with about 10 questions. Like, what was your loan amount? What was your loan number? How many employees? You answer less to, God, you probably answer less to buy or more to buy a pizza.
Yeah. Well, we've got some great chamber members, that even some that will work with folks who are not currently their customers on these PPP loans. So if anyone is interested, please reach out to me, and I can give you the names of a few that, if your current bank maybe isn't doing it, or they're not being as open to smaller loans, we certainly can help give them some referrals.
I understand it's not easy for the banks. I mean, it's just as much paperwork to make a $15,000 loan as it is for a $800,000 loan.
Exactly.
Yeah. But I mean, oh my God, the ones that have done it have saved so many jobs and mortgages. It's amazing.
Very good. Well, thank you again for being with us. Thanks all for joining us today, and we'll call it a day. Thank you. Take care, John.
You have a great day.
Thank you. Bye.